Hello traders and welcome to the market open preview through FXCL, FXCL Excellence in Trading. And thank you to them for allowing me to be your moderator today as we take a look at some currency pairs and get ready for the London Open and the New York Open. Today is April 22nd, 2014, and it's great to be with you today. Let me introduce myself to you. My name is William McKay Gilday, and again, I will be your moderator today, and I am a professional Forex trader. I started trading in 2006 part-time as I was still working in the fire rescue department in the lovely state of Florida. In 2008, I retired after 27 years of service and moved to the great country of Thailand, where I'm coming to you today live from the sunny beaches. What a beautiful day it is today in Thailand. I'm about 2 hours before the London Open as I'm preparing this video for you. So before we get to the charts, we got two currency pairs we want to look at in depth today. Let's take care of some legal business and let's bring over our risk disclaimer. Traders, this is our risk disclaimer. Forex trading has a large potential rewards, but also a large potential risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex markets. Don't trade with money you cannot afford to lose. Traders, do not trade your rent money to enter into a trade. Trade on a demo account until you're ready to trade live. Or trade a micro account where you're only trading 10 cents a pip. Alright traders, let's take a look at the news for today and what data do we have to watch today. Okay, today's data, not much. We have very little data coming out in today's session. We have no data coming out that's worth anything that's going to move the markets in the London Open. So, our first part of news is going to be just before the New York bell rings, and that's going to be out of Canada, where we have wholesale sales month on month, and at the same time we have out of the United States we have existing home sales. So that data is going to come out at the same time. It's an hour before the New York Stock Exchange opens in New York. Okay, let's take a look at some of our currency pairs today. We're going to start off with the first one out of two, and this is the Aussie dollar daily chart. Now traders, I got to tell you, this is in an uptrend. This is in an uptrend, and I know it says downtrend. Why do I say it's a downtrend? Look at how price reacted at the upper Bollinger Band and then came back down. So this is pretty interesting. And that's why I put downtrend. I don't think this is a change of trend. I don't think that this is going to break the 20 SMA, which is the center Bollinger Band, and you can see that we had no volatility since the end of Thursday of last week. The markets have been really flat due to the Easter holidays across the globe, so not a lot of volatility out there. The other thing, traders, keep in mind today that pivot points, if you use pivot points, and I love my pivot points, don't use them today. The volatility is too low and you're not going to get adequate data from your pivot points. So I would not pay attention to pivot points. Wait 24 hours and we'll use them tomorrow. Okay, so as though this pair is bullish, we have a slight downtrend for the last 7 days, but I'm thinking this might turn around and head to the other direction. But look at this 1 hour chart. Now we're going to get some confusion in the mix, right? So this is the 1 hour chart. And on this 1 hour chart, you can see I drew this trend line. Unfortunately, you can't see the whole trend line, but it is a 3-touch trend line, which makes it valid in my eyes. But look at where price is. Price is below the trend line, but above the 200 exponential moving average. So I am not real eager to jump in this trade right at the moment. I would take it long and follow the major trend of the daily chart if it closed above the trend line and gave me a bullish candlestick formation. When would I take it short? If it closed below the 200 exponential moving average, which is the green line on my chart, I would take it to the downside and it would have to show me a bearish candlestick formation. Okay, so the 1 hour chart, it's a little confusing, but it's not too bad. If you didn't catch exactly what I was saying, just rewind it and listen again. But basically, we want a candlestick formation above the trend line to go long. We want a bearish candlestick formation below the 200 to go short. Okay, let's go over to the 15-minute chart. The 15-minute chart, I am staying with the trend of the daily chart, which traders is bullish. So I did a fib, and you can see with the dark black dotted line where I placed my fib, and I am looking for this to come back to our gold box at the 50% or the 618. In that box, you can see where my magenta arrow is, and we're looking to take this to the long side. So I wanted to pull back, and then we can take this to the long side. The stop is just above 93, I would say 39, which is above the 200 exponential moving average, and you can see my little stop sign there. And that is my trade plan for today. Traders, if you do not feel comfortable with this trade plan or trading this currency pair, because there are a lot of variables and it's not black and white, okay? So we need to make sure that you're comfortable with the trade. If not, sit on your hands, find another currency pair, or just don't trade. That is okay. That is good decision making. If you don't feel comfortable, don't do it. Just sit down and watch. There's nothing wrong with that. Remember, traders, we get paid to wait. That's a great thing about Forex. We don't have to trade. We trade when it's in our favor, when the probabilities are in our favor. Let's go to our final currency pair, which is the Euro USD daily chart. Traders, look at this mess. This is the Euro dollar daily chart. It is in an uptrend by the channel lines that you can see there. But this is some wacky price action. If you look at these daily candles, they are all over the place. They've taken out previous lows, and they've come back up. They didn't take out the previous high, which you can see on the upper trend line there. So this is really kind of crazy stuff. It spiked the Bollinger Band and came back into the Bollinger Band and came back down again. Now it's stuck on the center Bollinger Band, which is a 20 SMA. So I'm a little leery on this one, but let's take a look at this. Look at the 1 hour chart. The 1 hour chart, what a little bit more decisive chart of what we have here. What I'm seeing here, traders, is if you look at the 200 exponential moving average, which is the green line, we have confluence. Look at what's right on top of it. We have a Bollinger Band pointing straight down. Look at the bottom Bollinger Band. It's trending, pointing straight up. So we have sideways after a downtrend correction. If you take a look at the last 15 hours, last 15 candles, this doesn't look very comfortable to trade. Again, because we had low volatility since Thursday, because of the holidays, over the last Friday and Monday, we have very little push in the market to make a decision one way or another. But the confluence area definitely sends a signal to me that that is something we need to look at. And look at this, traders. It does on the 15-minute chart. This is our 15-minute chart. And take a look at this, traders. At 38.06, we're going to look and see that we have the 200 exponential moving average. So I want this price action to pull up into our gold box, and I want this to turn around, hit that price area, remember it's an area, and we're going to take this to the downside. We're just going to stick our stop, traders, right above that 200 exponential moving average. You can see my little red stop sign up there. That's where we're going to do it. I put a trend line at the current price when I did this recording, and notice, traders, that it is bouncing off of it and it is not breaking through it. So there's a good chance this will hit our area to enter our trade, but I don't think it's going to be soon. Remember, we have no data in the European session today, so it could be a while before we see this come to tuition. So again, if you don't feel comfortable, and I'll be honest with you, traders, I'm not real eager to push the trigger today. I don't see a lot of decision on these currency pairs where they're saying to me, this is what we should do. So I'm going to watch it carefully, and I'm going to be the cheetah in the woods, and I'm going to wait and wait and wait until my prey comes right to me. Okay? So if you don't feel comfortable, stay out, sit on your hands. I don't mean to push it over and over again, but remember, we get paid to wait. Traders, on behalf of FXCL and myself, I'd like to thank you for joining me for this education market open preview And traders, until next time, safe trading and have a great day. Bye-bye.